Good morning, good afternoon, and good evening, Dallas-Fort Worth investors. Scott Carson here, ready to peel back the layers on the DFW real estate scene. Let me tell you, North Texas is buzzing with shifts hotter than a fresh batch of Texas chili, presenting a smorgasbord of distressed grabs and upside angles. From median sales price dips to looming commercial loan maturities and a market cooling faster than a frozen margarita, grab your cowboy boots. It's time to wrangle some insights. Here are 5 stories making headlines and what it means for your wallet in DFW real estate. First, a market update from Orchard discussing the inventory Bloat and Legacy suburb distress. Median sales price slipped 4% year over year to $378,251 over the last 30 days, with 6.3% more inventory piling up to 42,000 active listings. Plano and Frisco are topping the charts with 5,000 plus homes. Days on market stretched to 46 and sale to list ratios dipped to 95%, signaling seller concessions. Investor sweet spot. This inventory flood means distress in legacy suburbs. Look for pre-foreclosures up 11% in Collin County from rate hikes, letting you scoop fixer-uppers 12 to 18% below comps. Think quick renos on singles yielding 6 to 8% rentals as tech jobs pull in 200,000 new residents by 2026. Secondly, M&D real estate talking commercial distress looms and office to resi conversions. A whopping $150 billion in loan maturities looms through 2025, spiking distress signals. 64% of private equity's $2.3 trillion dry powder is eyeing North Texas for bailouts. Hotel CMBS loans are in trouble. 31 flagged mostly in Uptown and Las Colinas with delinquency rates at 7.2%. Investor Edge value-add multis in Frisco are trading 20 to 30% under peak values post-refi crunches. Grab them for conversions projecting 9 to 11% IRRs as office to resi flips get 15% tax breaks under new incentives. Third, Norada's forecast for Collin County foreclosures and cap rate Goldmines. Average home values eased 2.8% to $377,186, but investor sales climbed 6% year over year, despite 57% more cancellations, inventory at 4.2 months, shifting power to buyers. Key stat, Collin County foreclosures spiked 14% from affordability squeezes, with medians flat at $450,000. Distressed play, snag those in Rockwall or McKinney for 3 to 5% stabilization by mid-2026. Booming sectors like finance, 111% job growth. Juice rental demand to 95% occupancy, 95% occupancy, 95% occupancy, turning $300,000 flips into 10% cap rate Goldmines. Fourth, Cushman and Wakefield discuss office vacancy yawns and how industrial rents are soaring. Office vacancy yawned to 22%, up 2.5 points quarter over quarter, but industrial rents jumped 5% to $7.50 per square foot amid the e-com boom. Quarterly sales volume is down 8% with $1.2 billion in multifamily trades. For distressed hunters, Uptown office to multifamily conversions are surging with 12 projects underway. Legacy subs like West Plano have REOs at 25% discounts from $97 million in recent hotel distress sales. ProMove bid on those for 7 to 9% yields, leveraging 10% appreciation from airport expansions. And finally, it's DFW's #1 potential and the post-storm distress. DFW keeps its title as #1 for real estate potential for 2026, crediting a diverse economy and 4.5% GDP growth, job ads 111% in finance, drawing Gen Z buyers but inflating affordability gaps. Median rents up 3.8% 2% to $1,850. Tie-in for distress, sub 400K singles in Rockwall are flooding from 12% claim denials post-storms, trading 15 to 20% under market for renos. Investor upside, resilient market forecasts 4%, price pops by 27, making these quick turns 12 to 15%. ROI plays with low vacancy from relocations. DFW's distress wave feels more tactical than terminal right now. It's a buyer's buffet, and the timing is everything. Whether one of these headlines is lighting a fire under you or you want to zero in on a submarket, the opportunities are there for the taking. That's going to do it for your DFW market update. Thanks for listening to the How to Invest in DFW Real Estate podcast. Make sure to subscribe and leave us a 5-star review to stay on top of the latest news